Hi everyone. I thought I'd just give you a bit of a 2023, 2024 financial year recap and provide a bit of an outlook on what I'm seeing in the market. So again, a bitch of a year by any stretch. The small cap market, as most of you would know, has been terrible now for well over 2 years. And a number of our companies, unfortunately, have struggled through. Conditions have certainly been difficult, especially to raise capital at a decent price. And what the weak market has allowed is the influx of speculators who wouldn't normally be involved in our stocks. And some of these have been able to get cheap placement shares, and those shares have come onto the market pretty quick. And in this environment, most undertaking placements have had to issue some options with them. So the traditional fee and flip model is where they take up a placement, take the fee, sell the shares, keep the options, and move on to the next deal. And I don't think that this should really detract from the fundamentals of the company. I certainly wouldn't let it drag you down. I know it's frustrating to see a lack of movement and share prices heading south, but this is all part of the longer term experience. And I was talking to a client recently, and I reiterated that all my greatest career wins across coming up to 26 years have come out of adversity. This is where share prices get absolutely smashed, and we're presented with outstanding buying opportunities. And it's never come from buying a stock at 20 cents and having it trade at 22 cents all the way through. And another one of my sayings is that the level of angst and hatred towards a company depends on the shareholder's entry price. And someone who bought a stock at 30 cents and the company's trading at 10 would be pissed with management. They'd probably want a change. They'd claim that they're not promoting the company. But this view wouldn't be shared by someone who bought the shares at 7 cents on a dip, who finds themselves in the profit zone. So again, it's all relative to what you paid for the stock. I can certainly say with a high level of confidence that our companies are out there doing their best in difficult circumstances. Mustn't be easy being a CEO or a managing director in this environment, because obviously the shareholder angst levels would be off the charts. So overall, a very tough year. However, there has been some winners that unfortunately not all of us were holding. So here's the disclaimer. I'm going to make it perfectly clear that I'm not taking into consideration your personal circumstances as I'm doing this presentation. The information is true and accurate as I believe right up to the time of recording this. And it should be noted that this is general advice only, and it should not be perceived as personal advice. If you'd like to discuss your situation, obviously get in touch with me. So again, general advice. So that's probably been the tale of two halves. We've seen some strong share price performances across a handful of stocks, and then we've had issues with the red-headed stepchildren, and it certainly has been one of those years, and unfortunately it's a bit of a continuation from the one before, but certainly tough going. But again, a lot of what's occurred is totally out of our control, and for many who would have foreseen what some of these share prices and the placements with the sweetness thrown in as well. So one of the best performers over the financial year has been Spartan, which was formerly Gascoigne. Now, I picked up this stock from the Resources Rising Stars conference on the Gold Coast. I met with Simon Lawson, And at the time, the share price was trading at 11 cents. And this was around a year ago, actually. And since then, they've made probably one of the best high-grade gold discoveries in WA called Never Never. They've also found another pot of gold they've named Pepper. And they have the mill, which is about 5 years old. They built a mine to start mining at Dalgaranga. And ultimately, Gascoyne pretty much went under and was recapitalised. So when I was talking to Simon, I was assessing the situation. The company had an emerging discovery. They had about $40 million in the bank. They had a operating plant that had a replacement value probably around $200 million. And this was a rare occasion as well, where I'd assumed that the tax losses were probably worth as much as the company. And the last time I saw this was Dominion Mining many years ago, when they were trading at 28 cents. And I think from memory, they had about $160 million in tax losses. And Dominion Mining looked as though they were going broke all the way to $6.79. So Spartan, for clients that bought this around 11 cents, they've absolutely smashed it out of the park. I marketed it initially as potentially another Demetallica, where I thought that Gascoyne at the time, that they'd probably be the subject of some corporate activity. Now, they've been allowed to get on with this discovery, Never Never. The grades have been amazing. We're going to go well over 1 million ounces. And only recently, in the last week, Ramelius Resources bought 8.9% of the company at 89 cents. And they've straight away declared that they won't be making a takeover offer. And I think that could be in relation to not getting towards 19.9% of the company, not being able to find the selling. And most of the selling obviously was from Tembo, who recapitalized the company. So it looks as though Spartan, I don't want to jinx it, but this looks as though it's going to be a 10-bagger in no time. It's one that's worked absolutely beautifully. But mind you, when you get a discovery of that nature, the upside just has to flow. So Spartan, pretty much one of the best stocks of the financial year for clients. Dimerix, this has been an exceptional performer. As you can see there, a 750% return, give or take, over the year. And Nina Webster came to the drinks I held in Melbourne, and she impressed everyone who met her. The stock was trading probably around 11 cents at the time of these drinks. The market pretty much, especially in the biotechs, turned to complete shit thereafter. And Dimerix got down to, can you believe, about 6 cents. They then completed a rights issue at 8 cents. And actually, with the rights issue, there was an attaching short-dated and an attaching long-dated option that came with it. And last I looked, the second lot of options were trading at around 33 cents. So essentially, with the short-dated, long-dated options, when this stock hit into the 60s, it was essentially a 10-bagger for clients. And I guess seeing Dimerix sold down to 6 cents just highlighted how stupid and irrational the market was, considering that they were in a phase 3 clinical trial for a kidney disease drug, where there hasn't been any real advancements in treatments for the last 20 years. So this has been a very satisfying winner for clients, but I will reiterate that we're not over the line yet. We need to see, hopefully, a US licensing deal, and we're waiting on the second readout later in the year. So certainly not without risk. but we overcame the first binary, which was the first readout. The company, I guess it was a master stroke. They ended up raising $20 million at 30 cents when they announced the first readout. There was a bit of a few tantrums from shareholders saying, well, why didn't you let the share price run? But I guess those coming in at 30 cents deserved a chance of upside as well. So again, one to watch. I know some clients have taken a little bit of profits on the way up, but really for the time I've backed this company, it's an exceptional result and hopefully will be a firm 10-bagger. PharmAust, certainly one of the most bizarre stocks I cover and have been involved in. The bulk of our stock came from a 2.5 cent rights issue shortfall that I actually did in February 2019, believe it or not. And recently the share price, it probably won't show on that chart, but it actually touched 52 cents. So this was essentially a 20-bagger for those that took up the 2.5 cents rights issue. I've also participated in an 8-cent capital raising, and we had a 15-cent unlisted option. And PharmAust also, I don't know how they did it, but they managed to extend their short-dated options, offered this to shareholders for an additional 0.5 cent, and these options ended up getting to about 37 cents. So I'd those returns from the lows on the good news in relation to Monty Pantle and MND saw this thing 25 to 30 bag for some clients. It has been quite a long-term relationship since pretty much it would have been about 2017, 2018 when I got heavily involved in the company. I still have quite a few clients holding the stock. The last placement that I offered around, it went to those more loyal PharmAust shareholders. But yeah, again, an exceptional performance. And the reason why that the stock had the dip was that it ran out of gas. And at the time, Michael Theon, the CEO, actually resigned and they got poleaxed. But since Theon has returned, they've just undertaking a capital raising now at 19 cents. But I'd like to reiterate to clients that when something 20 bags and everyone's high-fiving and the cult on hot copper is going absolutely nuts, it's time to sell some. And from my lesson, especially with Exopharm, I think that when you're starting to see 10 to 20 times your money, you have to take it, and then you can always put some money away for tax, or you can redistribute, or you could buy some boring blue chips with it. But Spartan, Dimerix, and PharmAust have certainly provided multi-baggers. I just wish that these returns were in some more widely held stocks. And yeah, it would have been a much better year. But anyway, some clients have held at least 2 of these, which has been a fantastic result. Now, looking towards what I think are the highest quality junior resource stocks on the market, Red Metal over the financial year has actually performed reasonably well, up 143%. Late last year, I did offer clients an 8-cent placement, which we took up. It did come with an unlisted 13-cent option. Then there was a rights issue shortfall as well. Now, the share price has kicked on the back of a bit of a surprise rare earth discovery about 20 kilometers from Mount Isa, called Cybella. Rob Rutherford, during the last rare earths bubble, this was around the 2011, 2012, was looking at this project. And since there was a bit of a recovery rare earths prices, he dusted it off and it's looking very good. We've had the first lot of metallurgy ticked off by ANSTO. Rob, in his last presentation, said that, this has got the green light. They have done some drilling, completed some drilling. We will have assays shortly. We're waiting on some further metallurgical results. And hopefully, once we can see a JORC resource, then this Sibella rare earth project could get some serious backing. But originally, my longer-term stance towards Red Metal is based on the fact that they hold 44% of Maronan Metals, which is another company we've just raised some money for. But I want you to have a look at the long-term chart of Red Metal that's been listed 21 years. And as you can see from that chart, that the stock is certainly cyclical. Over that time, you will see some 200, 300, 500, even 700% rallies. And the last huge spike was the initial Maronan discovery. That's when they had some big hits, and then they drilled into some grade that was more oxidized, and they just couldn't replicate it. Since then, during the 2015 to 2016 market, which for junior resource companies was one of the shittiest I've ever been involved in, the share price got down to about 3.1 cents. We had a rally to about 25 thereafter. But I feel now that with Sibella, we have the Yarrie project with BHP, we have a host of other high risk, high reward projects. And more importantly, I think that the Maronan project is certainly shaping up nicely. Now, I just completed a 24-cent capital raise for Maronan. There was a share purchase plan that aimed to raise 1.5 million, and Maronan ended up getting sent more than 3 million. And I actually think they did the right thing by taking all that money. So shareholders could have had as much stock in hindsight as they wanted. And this project, with the drilling and the early metallurgical results, has been going seamlessly. What they've discovered is mineralization that's actually closer to the surface than what they expected. It's soft ore. There's certainly the potential to add further tons with the lead, the silver. We have a copper gold component. So essentially, two 30 million ton resources next to each other. And we also have a separate 72,000 ounce gold component. Now, this is near the historic prolific Cloncurry region. And what I see with Maronan is that Richard Carlton and the team simply have to get on with their job of getting this project towards production. You have to just carry out the steps. And if we get taken out in the meantime, then shit happens. But hopefully they can get this project as far advanced as possible. Now, we do have the 30-cent options expiring on the 25th of October. It would be fantastic to see the share price higher than this. Obviously, there's no guarantee of that. Now, what those 30-cent options do is they open up to a 60-cent piggyback option. So then you'll get a 60-cent option with another year to run. I did record a video for clients on the Maronan options, the Maronan opportunity, and also the 13-cent unlisted Red Metal options. But looking at my triangle of high quality, both Red Metal and Maronan are certainly in it. I see fantastic growth ahead for both Red Metal and Maronan. Red Metal, in terms of the exploration potential, they could jag something with the BHP joint venture and some other projects looking towards Pardue in the Pilbara. But the real excitement could come from when they eventually get the Yarrie project in the Paterson province drilled. So exciting times ahead for both those companies. Now, the third company that I consider to be of the highest quality is Saturn Metals. Their shares are currently in trading halt in relation to a placement. I've obviously assisted with that and have all the details on that placement. It has gone exceptionally well, but we'll wait for the official announcement before the details are released. So the stock hasn't been a massive performer. When the Apollo Hill resource was really upgraded, we could see there that it was certainly on its way to $1. The share price has since struggled in line with the junior gold sector in particular. But the Apollo Hill resource now is at 1.84 million ounces. It's low grade. It's likely to become a heap leach operation. This capital raise should assist in moving this project towards production. But the real cheesecake with this company could come from the exploration potential, and they have had approval now to drill on the Salt Lake, and there could be hopefully a repetition of Apollo Hill in the portfolio. So at the moment, a worthwhile hold. The shares will resume trading, and I'd certainly pounce on any weakness. The register is full of institutions, and more recently, Hedley Widdup's Lion Selection took a stake in the company, and I think they're currently holding around 10%. Now, one of the red-headed, freckled stepchildren, the sector has essentially been the biotech sector, and in particular, Radiopharm Theranostics, which has been an absolute shit show with the share price and the market in general. So the shares listed at 60 cents. The last sale price was 3.8 cents. However, some of the reasons for this, obviously we've had delays with the clinical trials. They've had quite a large cash burn. They also took out a Lind financing facility, which saw even further pressure on the share price. And at one point, it felt as though we were in a bit of a death spiral. But what's happened since is that we have a major investment from Lantheus and a placement of around $70 million. So Radiopharm essentially is being recapitalized. Lantheus are taking up to $15 million. They're looking at paying $3 million for 2 early stage drugs projects in alliance with Radiopharm for this. Now, Diamond Research previously had a 70-cent target on the stock based on the level of dilution in this placement and capital raise. That target has now been reduced to 50 cents. Now, clients are going to be offered the chance to participate in the share purchase plan. The price is 4 cents. I know we're below that, but this does come with a 1-for-2 6-cent option with 2 years to run. And that's where the real leverage and upside potential could come. So I think eventually, once the stock is able to digest such a large capital raise, we can certainly focus on fundamentals. And I know no one's going to believe the 50-cent target, but the company's performance is going to hinge on how well these drugs perform and the potential for them to be commercialized. So the one thing that has stood out about the Paul Hopper stable especially has been the fact that fundamentally the companies are strong. We've just copped an absolute shellacking on the market. We've had market participants involved in the shares that shouldn't be anywhere near them. And once negativity starts to breed, it unfortunately just catches on. So it's been an absolute torrid time in Radiopharm pretty much since inception. But this opportunity certainly looks transformational, and I'm looking forward to the recovery. Just quickly, Chimeric has been another red-headed stepchild with freckles. Jennifer Chow resigned from the company. We do have a new COO in Dr. Rebecca McWalter. I've met with Rebecca recently. She's impressive. She's young, she's driven. She understands the industry, and I think she's the right person for that job. Chimeric has also struggled with their financing options. There currently is a facility which isn't doing us any favors, but they do have 3 great assets. The share price is trading around 1.8 cents. And if Radiopharm can get out of the spiral and progress, I think we might see some tailwinds for Chimeric. Proteomics has been actually quite a good performer since I got involved in the company, from about 17 cents. Admittedly, it did get to around $1.40. We're currently around 90 cents. The share price has suffered a little bit due to delays with the Sonic Healthcare Alliance and ProMarker D, which is their blood test for diabetic kidney disease. We are expecting some readouts on esophageal cancer and endometriosis, plus their other pipeline. So I'll be looking for proteomics to stabilize. As I mentioned earlier, it has been quite a good performer, but over a number of years. Adalta did have some great news in relation to AD214, and we are awaiting, hopefully, an alliance with another biotech company to see how this drug for idiopathic pulmonary fibrosis can develop. Tim Oldham is doing everything possible, certainly not shy on the stock promotion, trying to get the story out there. But I think it's all going to revolve around a deal at the corporate level on AD214. So certainly one to watch. The share price is around that 2526 mark. My latest recommendation, Syntara, briefly doubled there for a while. It's since come back to about 2.2, 2.3. Pardon me. And they have a number of clinical trials coming up. Certainly one to watch. Now they were the old PharmAxis, which was trading at 27, 28 cents every day of the week. So Syntara, certainly one to watch out for.